This article is coming from the Molly Fool. Is this top robotic stock a buy for 2023? So, you got artificial intelligence. When that comes to mind, everyone thinks now of the recent Chat GPT and Microsoft. But then there's also robotics, and that's where TeraDyne comes into play. Physical robots that can automate the testing and manufacturing of electronics and other mass manufactured products. According to many reports, robotic sales hit new records in 2022 for TeraDyne, um, and are poised to remain a top growth market the rest of the decade. Um, However, there was a glitch, and stock is down 40% from the all-time highs reached in 2021. According to the Association of Advanced Automation, sales of robots, primarily in factories, tallied up to over 44,000 in North America alone in 2022, 11% increase year over year. Now, when I think of robots and robotics, I think of robots being used in the fast food industry. During the pandemic, and coming out of the pandemic, restaurants could not find workers, and so you had some of these robots starting to, make the fries, flip the burgers, etc., etc. You have robots being tested as waiters and waitresses in diners and restaurants of that nature. So this is only going to pick up. We are also in the age of robotics. So TeraDyne is in the right lane. The bulk of TeraDyne's 3.616 billion in total sales in 2022 came from a different kind of robotics testing equipment for semiconductor and electronic industry. So semiconductors, they make the world run. Every single electronic device has a microprocessor in there, or a semiconductor chip. So again, TeraDyne is in the right lane. It has an excellent balance sheet, almost $1 billion in cash and short-term investments. Um, Only has 50 million in debt. However, the shares are selling at a premium. Um, Currently trades for 34 times 1 year forward expected EPS, um, assuming that the declines in earnings are going to occur over the next several quarters. All right, so you got some of the fundamental pictures, secular potential picture of TeraDyne. Let's go to the chart. TER. TER. All right, so it looks like it bounced off the October lows. Looks like it's down. Um, so when it bounced off the October lows, it was down um, roughly 50%. It's had a nice bounce back along with tech. All right, so potentially we missed the opportunity to get the lows. Let's go to the weekly chart. Once it gets back to 125, it's smooth sailing all the way back up to all-time highs. But until then, um, this just might be a normal pattern of an uptrend where price moves in an impulse, pulls back, impulse, pulls back. Impulse occurs in the direction of the trend. You can see it making higher highs, higher lows, higher highs, higher low. Maybe the next one is a higher high, right? Let's go down to the daily chart. A lot of sideways action since late February. So really, price has not really moved. One was earnings. Earnings was most recent earnings was on January 25th. Price did not really move. This would have been a good entry to get back in. Um, this was you had daily buyers. Okay, so Gonna go to current price, look up and to the left to see where I can find some sellers. You got this huge gap. Right, this must have been on earnings. Um, yeah, maybe price continues to respect this uptrend line, take out the pivot high. So that's when I would consider or be interested in price. Price is currently also protected by the support at daily buyers at the $100 level. If I zoom out to the weekly again, yeah, I would say the true. All right, so in this, you know, indirectly, I was looking at price closing above the 112 level, but current price in this 112 level is where you have resistance support band. Could be why price pulled back as well. So we need to see price close on the weekly chart above the 112. If price can get above and close above the 112 and continue to respect this uptrend line, the chart suggests price is going to continue to move higher. You get above 128 and it is smooth sailing all the way to the all-time highs again at 164, 168. Thanks for watching. Subscribe. Please like the video.